Dear friends of Volumetric Trading, welcome back from Eduardo Buratini after this summer break. And we're getting back into the swing of things with a full-fledged analysis video on the S and AMP wink with tongue sticking out 500 in NASDAQ for today, Tuesday, August 26th, 2025. So, let's see. We have a situation that looks like this. Let's start with what was, first of all, a move that brought us back. Here we're going to connect for a moment to not just the previous session, but even more than one session ago. As for the S and AMP wink with tongue sticking out, we have a market that, yet again, has come back to retest the all-time highs that were set around the 6,500 area. More precisely, about 6,510. We saw these highs being set around the middle of the month. The market came back for one last test. Well, last for now, we'll see. In the area of 6,370 to 6,365 before coming back to retest the area around 6,490. So, it returned close to what had been the all-time high zone. Now, this area here is really crucial from this point of view because, as you can see, the market has left the 6,500 zone, leaving behind two absorption points, not just one, but two, particularly significant absorptions by buyers, okay? So, in fact, we can consider this as the creation of a new all-time high, but one that was strongly rejected. Not so much due to a lack of buyers, but rather because of a massive presence of passive sellers rather than aggressive ones, who thus caused what we can call an absorption. Yes, an absorption in the sense of neutralizing all of this strong bullish action. And from here, we went back to make that retracement we were talking about. Over the weekend, or rather, to be precise, on Friday at the close of the session, we had a close that retested this entire strong and also fairly wide absorption zone. So this whole area around 6,490, which, for simplicity's sake, and also because it's quite a broad zone in terms of ticks and points considered, well, all of this, the entire area between 6,460 and 6,500. So, we're talking about a range of roughly 40 points, more or less, which isn't a huge amount for the S and AMP wink with tongue sticking out. But it's not exactly small either to be considered just a simple level. It's a real zone, an area where yesterday the market created a distribution, okay? This is a very important detail because since the market created a distribution around this range, it actually did two things. First, it confirmed the presence, okay, of responsive selling activity here in the upper part. So it confirmed the validity of the upper part of this range as a possible resistance, meaning the area around 6,500. At the same time, it continued to confirm all the acceptance that had been built around this area, even closing yesterday's session with a potential because, clearly, everything still needs to be confirmed here. Rejection to the south of this zone of about 40 points that we identified. Technically, this is the most important line in the sand for today, because depending on how it might eventually be lost, we can then start talking about yet another rejection by buyers up here, which would lead the price to look for a new balance just below, ideally around the 6,400 area. Okay, so it would shape up as a continuation leg compared to this first one that had already formed on August 20th, right? And so here we could gradually see the price coming back to retest the 6,400 level, but basically it will tend to look for support at lower levels. So, in order of importance, 6,400, 6,370, and then all the high volume nodes we see immediately below, like 6,335. Well, let's say that this scenario includes, clearly, for it to happen, it implies that this level somehow has to give way, because, as a line in the sand, today we really need to see if this breakdown will actually occur. On the other hand, if this area holds, in fact we have so, without predicting anything, we still have a well-defined acceptance area that developed throughout the entire day yesterday, and that matches what was also an older acceptance and distribution area. So, if instead this aspect holds, we will basically have a market that tends to be balanced and will tend to range around, specifically between 6,460 and, of course, its most important technical level at this point remains 6,500 on the upper side, where, by the way, we can see that yesterday and the day before, the market also left us two untouched POCs, okay? Two untouched POCs that, therefore, could quite likely be retested. So, let's say that obviously the retest of these POCs would confirm the ongoing distributive status, continuing the distribution. We still can't talk about a clear, a definite bullish view as long as we don't see this technical area at 6,500 broken and accepted above. This would obviously also imply a breakout of what has been the all-time high, okay? So this is definitely the most important scenario I want to point out today for the S and AMP wink with tongue sticking out 500. So keep an eye on this area, which actually marked yesterday's low, 64.50, because this is really its line in descent. We absolutely shouldn't see any acceptance below here if we're going to talk about maintaining this balance, okay? It could potentially be a precursor to a new bullish continuation, but only if we manage to get a solid breakout above 6,500. Let's take a look at the situation on the NASDAQ. Let's erase the drawing. On the NASDAQ, we're basically in a similar situation, okay? Similar, obviously, since these are two fundamentally correlated instruments. It couldn't be otherwise, but we also see, let's say, certain differences. Because the most important difference is that, compared to an all-time high set at 24,067, let's say 24,000 and change, well, 60 points for the NASDAQ isn't really that much above the technical and round level of 24,000. And we've had, well, this same pullback that came back to look for support around the 23,000 area. So we're talking about a considerable number of points of retracement, but we can see that still, especially during yesterday, what might have already happened is a rejection of a fairly important area. Here it is. The important area in question is this one around 23,004. Let's say between 23,004 and 23,450, because you can clearly see that here not only did the market retest the VWAP, which obviously remained untouched from last week, so the one that closed on Friday, and all of this reacting quite violently. From here, we also saw a pretty pronounced rejection of this low volume area, which defines the southern part of this local distribution visible on the composite. This is something we absolutely did not have so clearly defined on the S and AMP wink with tongue sticking out. And we can also see that in this area. Not only are we facing a fairly significant block of sellers who, made a really strong effort to push the price down, but apparently the vol analyzer quantifies this effort as futile because right as we move away from this area, we see an absorption line on the vol analyzer, which basically tells us that this rejection might have already fully taken place. And in fact, the descending line, if on the NASDAQ, if now on the S and AMP wink with tongue sticking out, we had identified it around yesterday's low, let's say, but without much clear evidence yet. Here we actually see it at yesterday's low, but with much more significant evidence. In fact, we can even see that during yesterday's session, the market already gave a pretty strong initial push rejecting that area. So, a NASDAQ that definitely, even though it's further away from its all-time highs, is still showing greater strength in holding its levels during yesterday's session. Obviously, this will be the descending line. So in today's session, we need to be careful that it doesn't get broken, because if it does, then here too we could see a slightly more significant recovery of the levels just below us. 23,220, then 23,130, and then again 23,000 flat. And of course, all of this only if the descending line actually gives way. On the other hand, if we continue to see acceptance above this absorption zone that was rejected yesterday, then the distributive context would also be confirmed here. But as you can see, in this case, the distributive context leaves much more room because the first resistance starts at 23,665, and then all these vol analyzer levels that begin at 23,750 up to 23,850. So technically, there could be a lot more room to extend, and clearly, this could also benefit the S and AMP wink with tongue sticking out. If the descending line we mentioned earlier holds, it could even lead to the creation of new highs. Why not, right? We'll see how things play out during the session. In any case, I want to remind you that this analysis is for educational purposes only, and therefore should not be interpreted as an invitation to take a position or as a solicitation for public investment. Thank you for your attention. I wish you a good day and good trading.